Welcome to Binary Options Euro-US Dollar Strategy. This topic is brought to you by binaryoptions.net.au. Dominating foreign exchange markets globally, the Euro-US dollar currency pair trades an average turnover of approximately $4 billion per day. Accounting for almost 30% of all spot trades across all Forex markets globally, the Euro-US dollar pair is considered highly liquid and is classified as a major currency pair. That is, both the euro and US dollar are currencies in which most of the world's foreign transactions are denominated. Before discussing the mechanics of euro-US dollar trading, it is important to understand the basics of foreign exchange. Foreign exchange trading, also known as Forex, involves the simultaneous buying of one currency, known as the base currency, and the selling of the other currency, known as the quote currency or counter currency. For our purposes, the base currency is the euro and the quote or counter currency is the US dollar. The currency pair is considered a single unit that is bought or sold with the value of the base currency always equal to 1. For example, if the euro-US dollar pair is quoted at 1.4746, that means it takes 1.4746 US dollars to purchase 1 euro. When a trader buys a currency pair, they are effectively buying the base currency and selling the quote currency. The bid or buy price is the price at which the market is willing to buy the base currency in exchange for the quote currency. Conversely, when a trader sells a currency pair, they are selling the base currency and buying the quote currency. The ask or sell price is the price at which the market will sell the base currency in exchange for the quote currency. It is important to note that the bid price is always lower than the ask price. The difference between the bid and ask price is called the spread. Because the euro-US dollar pair is the world's most heavily traded currency, the euro-US dollar offers very low bid-ask spreads and constant liquidity for traders wanting to buy or sell. Forex price movements are triggered by currencies either appreciating in value or strengthening, and depreciating in value or weakening. The euro-US dollar was first traded in January 1999. The euro, which is the single European currency for 17 member states of the European Union, and the US dollar, sometimes referred to as the greenback, the world's largest currency denomination, has a high-low trading history of between 1.6037 and 0.8225 cents and currently trades at 1.6640. Because binary options traders are not concerned with how much an asset moves in price, only the direction, a binary options trader places a call trade if they believe the price of the euro-US dollar is set to rise. That is, that the counter currency, the US dollar, will depreciate, while the base currency, the euro, will appreciate. Conversely, the binary options trader places a put trade if they believe the price of the euro-US dollar is set to fall, indicating that the counter, the US dollar, will appreciate, whilst the base currency, the euro, will depreciate. The euro-US dollar is considered the most important currency pair since it involves two of the most influential economy entities, USA and Europe. The primary factor that influences the direction of the euro-US dollar pair is the relative strength of the two economies. With all other things being equal, a faster-growing US economy strengthens the US dollar against the euro, and a faster-growing European Union economy strengthens the euro against the US dollar. One key sign of the relative strength of the two economies is the level of interest rates. When US interest rates are higher than those of key European economies, the dollar generally strengthens. When Eurozone interest rates are higher, the dollar usually weakens. Another factor that can have a strong influence on the Euro-US dollar relationship is political instability among the members of the European Union. The euro currency is unique in that it is a common currency for 17 European nations. As the countries within the Eurozone learn to work with each other, differences sometimes arise. If these differences appear serious or potentially threatening to the future stability of the Eurozone, the US dollar is likely to strengthen against the euro. Research suggests that some currencies' price action tends to move in the same direction, some move in the opposite direction. When this pattern occurs, traders refer to this as a correlation. The correlation can be either positive or direct, or negative, inverse. Correlations between the world's most heavily traded currency pairs and/or commodities are common. In trading terms, a correlation of +1 means two currency pairs have moved in the same direction 100% of the time. A correlation of -1 means they move in the opposite direction 100% of the time, while a correlation of 0 means there is no relationship between currency pairs. The knowledge of correlations in any market can be used for trading advantage, including predicting the direction of the market, avoiding overexposure, doubling of profitable positions, and hedging against risk. A positive correlation signals that two currency pairs move in the same direction. That is, there is a direct relationship. The Euro-US dollar pair is positively correlated with both the pound US dollar and the Australian dollar US dollar, with a correlation coefficient of approximately plus 0.9. This means that the Euro-US dollar rises, both the pound against the US dollar and Australian dollar against the US dollar appreciate respectively. A negative correlation signals that two currency pairs move in the opposite direction. That is, there is an inverse relationship. The Euro-US dollar is negatively correlated with both the US dollar Swiss franc and the US dollar Japanese yen, with a correlation coefficient of approximately negative 0.90. This means that when the Euro-US dollar rises, both the US dollar against the Swiss franc and US dollar against the Japanese yen depreciate respectively. So after identifying both positive and negative correlations with the euro and US dollar, binary traders must know how to use this information for profit. For binary options traders who are not concerned with how much the Forex pair moves in price, only the direction, a positive correlation will assist in identifying when a move is about to occur, but it will not identify the direction. For direction confirmation, traders can look to the range, the difference between the high and the low for a period for signals. On average, the Euro-US dollar has a daily range of approximately 30 to 40 pips. More volatile swing days can see the range widen to 60 pips. Because the pound against the US dollar is known to have a larger range than the Euro-US dollar pair, and the pair are positively correlated and generally move in the same direction, traders are able to identify a potential trade opportunity. Knowing that the pound US dollar has lower lows and higher highs than the euro US dollar, when the range lagging, also known as range lag, behind the range of the euro US dollar, binary traders can identify a potential directional trade setup. With the knowledge of the positive correlation, a confident binary options trader may also double their position size by placing call or put trades on both markets which are positively correlated, enabling the opportunity of increased double profits. Trading negatively correlated currency pairs allows traders to diversify strategies, use trade alternatives, and manage risk through hedging. For example, the correlation coefficient confirms the euro-US dollar is negatively correlated with the US dollar Swiss franc. This means if the euro US dollar is rising, traders can place a put trade against the US dollar Swiss franc in the assumption that the currency pair will depreciate. Alternatively, should the euro US dollar currency pair's price action not offer clear direction signals, the US dollar Swiss franc pair may offer a clearer alternative directional trade invest. Further, traders may use a negative correlation to hedge against risk. That is, because the two currencies move in opposite directions, when one currency trade loses, the other wins, offering a profit. Appearing counterproductive, a trader may use a binary option to hedge against risk on a Forex position held in the market. For more information about this topic and more binary options trading strategies, please visit binaryoptions.net.au.